Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, founder, and president of the Oxen Group. Please visit us at www.theoxengroup.com to check out all of our financial analysis and investment ideas. Well, today is March 7th. It's was an interesting day in the market for sure. And we're going to talk about that. We're going to talk about some of our new positions we got into today, including Ann Taylor, Smithfield Foods. We had a lot of entries and exits on the day, a lot of things to cover. Also be talking about our latest long-term rating we had on Salesforce.com. CRM is the ticker there. We had a entry on analysis, a financial analysis entry on that on Friday, and we'll also be giving our forecast of tomorrow. Well, it was not the greatest day in the market. Oil prices and the semiconductor downgrade that came from Wells Fargo kind of took the market down after some early gains. Basically, all the jobs gains we got from last week have now been wiped out completely. But we have seen that the market has been getting a really nice support level at 12,050 over the last basically 2 weeks. It's happened. So did get support there again today. So moving forward, that's going to be interesting. And also, maybe there's some, the oil situation might be cooling as, there was some early talks today that Gaddafi may be ready to cede power. He said this before once, but, I think he's starting to see that he's losing control of this country completely now. Thought he might be able to regain control, and it's not happening. So yeah, with that, we'll go to the latest in Libya. Today, Muammar Gaddafi said that he is ready to cede power as long as he can be guaranteed safety and exile and won't be, pursued for any war crimes. And right after that comment came out, you saw the price of oil was trading between the 106 to 107 range. It dropped all the way down below 105 and settled in the mid 105s. Fighting escalated tremendously over the weekend, which led to the higher oil prices that really hurt equities on the day. But as those oil prices started to decline throughout the afternoon, late afternoon, you saw that equities started to rally into the close. And I think that for the time being, with very little economic data and earnings on the agenda, you're going to see that oil prices continue to affect the way things go. And in our opinion, the fighting escalated to basically a war this weekend. So you priced in that all the way up to 107 in a war. So now from here, what's the next step? I mean, the war continues. Okay, we got that priced in. So now de-escalation is really the next step, unless something very, very drastically changes in another country or fighting increases. We're under the opinion here at the Oxen Group that this may be sort of the peak of it, because the fighting has been basically as violent as it can get. There's been airstrikes on the oil fields. There's been airstrikes at the port where oil is taken out of Libya. I mean, it's basically, Libya's oil's now getting about 0% out of the country right now, and that's getting what's priced into that price, as well as fears over other countries. If that de-escalation starts to happen, then we start to see the price decrease, and we actually did start to see a little bit of pressure on the oil prices to decline as the day wore on. And we can see from here, the market opens, started the day in the green. There wasn't a lot of news out that was really great. I mean, there was a couple deals. Western Digital had a deal that they were doing, and there was just kind of a rallying off of a bottom as oil prices opened, at 105, but we were kind of expecting that. But then oil prices continued higher throughout the day, and then we got a downgrade in the morning from Wells Fargo on this whole entire semiconductor sector. That really took the chips down. The NASDAQ really dropped fast, and it kind of took down everything with it. And we turned it down throughout the rest of the day, but we did see this rally happen towards the end of the day here. Here is where basically oil prices got to their highest point, and then they started to decline. They ended the day in the mid 105s, and we started to rally throughout the end of the day. And this 12050 level has been a bottom for literally every pullback that we've had so far, the last two pullbacks, the first Libyan pullback and then the Friday pullback to today. And though that is a nice support level that we've seen kind of be formed. And there's not a moving average there or anything like that. But we do see that at each time it hits the 12050, we do see fast stochastics bottoming. So there's definitely a low support level there, and we're hoping that maybe that will be something that we can bounce off of tomorrow, but we'll get to that in a bit. So we had a lot of new positions today. One of the first ones that we'll discuss is Ann Taylor. We got into this one at 23.49 in the middle of the day, towards the latter part of the day. We were looking for a 2 to 4% gain on this one. This company's reporting earnings on Thursday. I'm sorry, Friday morning, and the stock actually closed up 1.5% from our entry. And there's a combination of a few factors here that we like for Ann Taylor. First of all, they got earnings are going to be tripling year over year from 0.05 to 0.17, and then you also saw them in February. They raised their guidance. Actually, they went from raising it from $500 million in revenue to $515 million in revenue, and then EPS was raised as well. And you can see that this happened right here. So the stock was trading right here. After that announcement came out, it closed at $23. Now the stock today, you saw that trended up, kind of flatlined here. Was not really going anywhere. Got some nice boost from retail information that came out here and went all the way up to 24.50. Actually broke the 24.50. Actually almost hit the 25 level, but then trailed back down, hit its moving average, moved back up last week on the really good retail numbers that we got, and then hit another resistance here at 24.50, and then trailed back down today with the general market. Now we see that as it hit a support level here, and it has this kind of range now. It's here at 23.73, basically right on the support line. It's where it closed today, and so we think with with the news that's coming out, with the fact that they're going to be expecting better earnings, that they have this support here, that this stock should not trail down because of the raised guidance. We think that we got it at a nice level where it was going to bottom out, and we think it should move higher, maybe up to about the 24.50 level over the next couple. We also entered a position in Smithfield Foods today, and it was a similar type of story as we had with Ann Taylor. We like the stock. They're also having triple earnings per share growth, from 0.22 to 0.66 year over year. They're moving, and then they were right here on this bottom. We bought it at 22.12, right here at this bottom on the Bollinger Bands. You see the Bollinger Bands are really quickly narrowing, which means that this stock is about to break out. And I would not say that it's going to break out to the bottom, because you look here and you see that this is a huge gain that the stock had back at the beginning of February. And this is after Tyson Foods came out and said that they had just a gigantic quarter, after they had really good pork sales. And Smithfield Foods is one of the leading pork producers in the industry. So it was a very compatible stock, and definitely is going to get a lot of support into earnings. Other than that, we had a lot of other action today that we saw. We had a lot of other action in the market today. We exited our second half of CSUN for a 3.5% gain for our second half, and then we averaged that out for a 3% gain. We did have a couple positions that did not do very well on the day. We were stopped out on our second half of First Solar and ended down at a 0.5% loss. We were also stopped out at 7% of KC for a 2.5% loss, and we held 30% into earnings, and those earnings did not look good. So that's not going to be good tomorrow. We'll talk a little bit about that probably tomorrow. We entered and exited Wafer this morning, MEMC Electronics for a 1.3% loss, but we then neutralized that with the entry and exit in SKF for 1.3% gain. And then at the end of the day, we decided to take a little small position in the ultra short Dow Jones Oil ETF, SCO. Given the news that came out in Libya and with Gaddafi, and maybe the start of a de-escalation process, could be a nice drop in oil prices tomorrow. We wanted to get a little bit of exposure to that possibility. Definitely not for sure thing, and it was a little bit of a high risk. That's why we took a small position, just in case if oil does increase significantly again tomorrow, or does increase at all, SEO will obviously not do very well. So. But if it does decrease, SEO has been so underweight lately, so so sold off, that it's going to have a very nice day. So the downside risk is probably limited. The upside potential is very high. Also on Friday, we had a long-term rating initiation of Salesforce.com. It's one of the hottest stocks out there. We wanted to take a quicker look at it after seeing that it had a price earnings ratio of about 250 right now. We wanted to see what is this stock really worth. And after doing some financial analysis, we found a price target of $56, which is it's trading around the 125 to 130 range right now. So a very, very significant number that's very low. On Friday, we also initiated coverage on Salesforce.com. It's one of the hottest stocks out there, trading in the 125 to 130 range. And after a financial analysis, we found a price target of $56, significantly under what its current price is. So we put a sell rating on that. Basically, what we found is that if the company can double their sales in the next 4 years, that's going to increase operating income significantly, right? Double operating income, basically. But also, the company knows had a very low operating margin. It's about 8% right now. And we believe that over the next 4 years, they'll definitely be able to increase that. So if they can also double their operating margin to 15%, that will then make their operating income significantly larger. But the problem is that the equity value of the company is good, but they have so many shares. They have 140 million shares out right now, and that takes the equity value and really dilutes it significantly. If they were a typical company with around 70 million shares or even 50 million shares, then this would be a stock that could justify its share price, but they aren't. Tomorrow's forecast, we think that we saw that late rally and the possible oil drop tomorrow, and that does give me a little bit of hope for tomorrow. And you got a lot of stocks that are really close to the bottom of the technicals. There's a lot of good, there's a lot of value out there right now. There's a lot of stocks at their bargain prices, and I think that there might be a little bargain hunting going on tomorrow. No economic data out there, kind of pretty weak on the economic news and the earnings news, company news. So I think that it's going to be a market that's driven by what can oil prices do. If they can show a little bit of weakness and we can see a little bit of bargain hunting, I think we will see a pretty nice day in the market tomorrow. And that's going to do it for today. Visit us at www.theoxengroup.com. Email us at contact@theoxengroup.com. Call us at 1-800-709-1160. Be a part of 70% plus accuracy. God damn it.